Hi, everyone. So we're very, very lucky to be joined by these four wonderful crypto managers on this panel. I'm going to let them all introduce themselves for a minute. Hopefully you know who all of them are, but I want you to get familiar with them and what they do specifically within their organizations, and then we'll kick off the panel.
Yeah, sure. I'll start. My name is Janos. I'm with KR1. I'm taking Cal's place. KR1 is basically a publicly listed investment company that was founded in early 2016, and one of our first investments was actually Melonport, or the Melon Protocol. And yeah, we're generally very excited about the whole space, and also participated in one of the Melon competitions when you had them, and I guess we'll basically start something once you're live.
Hi, Jonathan Allen. Previously disarmed bombs in the military for 5 years. Yeah, it's very relevant to the crypto space. A lot of bombs here, I think. Yeah, and then went on to co-found blockchain at Berkeley. Worked with numerous crypto startups, built blockchain products for large enterprise clients, and now managing partner at Decrypt Capital. We invest in early stage blockchain projects and have a strong emphasis in privacy technology. So.
I haven't done any bomb disposal, but Russ Newton, Global Advisors, CoinShares and XBT, we run money in exchange-traded notes within the crypto space and a bunch of hedge funds, and we also do prop trading and venture capital investing all in the blockchain. We run about $300 million across all of those strategies, and we're kind of enthusiastic supporters of Melon, but not yet using Melon.
Hello, everyone. Chen Stu, founding partner at Coefficient Ventures. We're a new founded fund. We're actually more active in the 2018, and we're hybrid strategy. Both have the venture style and also the hedge fund style. And also, I'm a very big fan of the DAO. Pretty much that's it. One project that drives me further believe the decentralized future because I originate from China, like with southwest part China, a small town, and I really believe the capital should be democratized in order to make much more impact for developed areas or the underdeveloped the region in this world to help make more impact for us world. Thank you.
That's awesome. Thanks so much to the panelists. So before we get started with the questions directly to the panelists, I just wanted to gauge the sentiment a little bit in the room around on-chain asset management. First of all, apart from the panelists, how many asset managers, crypto or not crypto, or people that run money investments do we have in the room? Wow, a lot. Okay, good. Well, it is an asset management conference, so and how many of you, just a show of hands, can see yourself moving to your operations to on-chain asset management in the next 10 years? Wow, I expected more hands. Okay, so I'm not even going to ask 5 and 1. I was thinking that the hands would go down. So this is actually why I really wanted to do this panel, actually, because the point of this panel is that, you know, half of us in this room are spending a lot of our time building the next infrastructure for on-chain asset management, and we only saw 2 or 3 hands go up there for the next 10 years seeing themselves as users of on-chain. So I really want to get to the bottom of this during the next, how many minutes do we have? 20 minutes, 25? Whatever we have, half an hour, 25 minutes. To really understand, also for the builders in the room, what we need to be thinking about and doing better in order to get you guys as users ultimately, hopefully before 10 years, but hopefully if we ask this question in another year or 2, I would like to see more hands go up. I mean, does anyone want to jump in with, you know, some of the biggest fears or considerations around using this technology or shifting your operations?
I was thinking about this a little bit last night after I got the questions, and you know, we totally buy into some smart contracts and blockchain generally as a technology, but things like the parity bug really make a lot of asset managers super nervous. So the idea that you might have to explain to your investors that their fund just disappeared not because you mismanaged it, but because there was a flaw in the code, is really, really scary. So any time that you've got that kind of thing, we need to be super confident that the code has been audited. Now, it's great to hear that effectively, the Melon code is getting double audited, but I think that would be the single biggest consideration to.
Okay, I'm gonna challenge Russ, and it doesn't necessarily have to be you that responds to this, but I mean the parity bug was maybe, I think from memory, $100 million, but we saw more than that lost on centralized exchanges, maybe 10 times that on centralized exchanges last year. So how do you think about that risk? I mean, at some point there's probably a turning point, hopefully before 10 years from now, where it starts to become feasible that actually the liquidity and the security matters more to investors in your fund than than being able to explain a hack.
Yeah, I totally buy what you're saying, but the centralized exchange risk is a risk that most investors are kind of familiar with because it exists in all spheres. So you can manage that as a manager because you can say, I'll only ever have 5% of my assets with a particular exchange. I won't use hot wallets very much, et cetera, et cetera. If you're running a smart contract, you can't really manage out that risk in quite the same way because you're completely 100% exposed to that smart contract at all times. Anybody else?
Does anyone disagree or have different views on the panel?
I always think we should kind of decentralize that could be decentralized right now, like kind of step by step, not like put 100 million in whole funds like in a smart contract. We can always like do a small scale test version, like step by step until it's more smooth and have a possibility of like making mistakes.
Yeah, I mean, we're the proponent of that. I mean, we really hope that people do test this very sensibly in the first couple of years at least. But, I would like to think that 10 years from now, that we're at a stage where we're much more comfortable putting capital on chain. Janos, did you have something to say?
Yeah, I think if like all of this, what we're talking about here today, if that actually works the way we hope it might, it won't really be an active decision to manage your money on chain in 10 years. I think by then, hopefully the ecosystem will be at a place where it's like the default to do that way. Right now, of course, when you launch, it will be this very small pilot test of, hey, I want to try it out. I want to have maybe 10 Ether from our wallet in a Melon fund, and maybe even at some point like do some sort of active trading and then figure out what we need to do in terms of KYC or in terms of regulation to actually allow other people to invest. But then I guess the more this ecosystem matures, the more those assets will be settled or traded on some sort of decentralized technologies.
I mean, the part that I find hard to square is that all of you are running funds which presumably invest in the protocols we're all building. So, I mean, maybe, John, you haven't said much. Maybe you can walk us through the thinking behind that, because I would like to think that, I've been an investor in my previous life. I would like to say, in general, on a 10-year view, I'd be able to put my money where my mouth is.
Yeah, I was really going to kind of echo like your sentiment. I think like recently you've seen like the Bitcoin team as well as Zcash team like kind of have some of these issues, and it's some of the most respected teams in the world, right? And they're still having some potential bugs and flaws. So I think it all comes down to kind of like risk management. Obviously, all these things are like very speculative, very risky. I think the exchange point is like very apt. Us personally, we try to keep as little as possible on exchanges to kind of like lower that risk, potential risk. And I think it is a concern seeing something kind of like parity, where something could potentially get locked. There could be kind of flaws. So I think there's, for some of the larger funds or ones who are concerned about that, being a first mover in this might be a little bit of a concern. And I think you see that in traditional finance, you see that in crypto funds as well. You don't want to kind of be the first person to start beta testing this. And I think a lot of it is like really interesting. And that's why I'm here. Like I think there's a lot of potential. But it comes down to kind of like working those out, iteratively kind of onboarding people and kind of expanding this tool set so it helps the crypto funds as well.
Okay, well, we agree with you in terms of security. It's a very big focus for us, and that's why we focused a large part of yesterday afternoon on security with Matt DeFerrente, Martin's talks, and you'll have just seen that, you know, 3 of the members of the council are, 2 of them are auditors and 1 of them is a formal verification expert. So I guess, you know, in terms of the security point, we couldn't agree with you more in terms of, you know, that's also what keeps us up at night. But you know, again, there needs to be, you know, some leadership in terms of maybe what Chan said, like taking a step forward in terms of maybe pilot testing a fund, getting comfortable with the technology, getting comfortable with the risks, getting comfortable maybe with how to communicate those risks, and so on and so forth. But on the security subject, you know, formal verification has obviously been a big theme in the last year. You know, and or even just formally specifying code, is that something that would get you more comfortable as a user? Because we've thought extensively about implementing that in the next year, obviously with permission from the council.
Yeah, I was going to say we have like an in-house dev team that does quite a few code audits, and we've worked with quite a few different other auditors because we don't necessarily have the bandwidth to do all these things. So I think it's something that is evolving. I think formal verification is something that's very interesting. I would say that, you know, we've kind of like audited after a lot of these other teams have gone through it and have found potential bugs and flaws that they've missed. So I think it's something that is really needed because security is extremely paramount, especially as you start running kind of more money and more value through these. So it's something that I'd be very interested in. I think it's a step in the right direction. Yeah.
I don't know. I mean, I guess my view is that more about just hammering the product with lots of real world testing. And we've been reluctant to get involved in the early beta testing because everybody in this space is spread so thin, doing so many different things. But now that you're rolling out 1.0, it's sort of time to really get engaged and buy in. We can't really bitch about fund administration costs and how slow the industry is in traditional financial services unless we actually buy into the idea that we're part of changing that. And so I think we're happy to commit now that you're at 1.0 to putting 5 or 10% of one of the token funds into this over the course of the year and trying really hard to hammer it and hopefully not break it.
I think that deserves a round of applause. And you also made me realize that maybe I asked the wrong question to start off with. So I'm going to try and ask it again to the asset managers in the room, including the panelists. Who would be willing in the next 2 years from the crypto or asset managers to pilot test a Melon fund with real capital? That's more like it. Okay, so maybe my question originally was too scary. Regulation. Obviously, a lot of you, I mean, we've got 2 from San Francisco, I think. Yeah, and 1 from the UK. Well, 2 from the UK, actually, so pretty diverse. But, across the room, I think we're from all different parts of the world. What do you see challenging, as in terms of challenges from a regulatory perspective going on-chain? Because a lot of you will know or have realized recently that a lot of fund law revolves around financial intermediaries as the kind of police, on the fund manager, et cetera, et cetera. So getting that changed or adapted or even exceptions made is challenging. And how much of an element is that in your thinking as well? Or do you just think, well, if the technology worked, we'd figure it out, legally?
Yeah, it's an issue. I mean, we hope that our home base is Jersey and the Channel Islands, and Jersey made a business out of being quite early to financial services back in the 1960s with open-ended investment companies. And so when we pitched Gabby as the first kind of regulated Bitcoin hedge fund, we were kind of piggybacking on the idea that it's a small community. We could be persuasive in terms of the business case for cryptocurrencies. And so we hope that if we can demonstrate that this is a viable alternative to the traditional fund administration model, that the Jersey Financial Services Commission will, fairly quickly buy into that. We think there's a better shot of that than there might be in some larger jurisdictions.
Nice answer. Other extreme.
Yeah, I was going to say, I think there's like a lot of incentive to, adopt something like this. I mean, I think nobody really likes paying exorbitant amounts of money to their fund admins. I think kind of having that almost like month delay to kind of like settle these things and, reconcile after the month is just very slow. It's like we already have kind of our own internal process that, it's been with 1% every time, and we have it right at the end of the month. So It's something, but it's legally required, right, for these funds. So I think having something that's recognized, that's a lot more automated, that's a lot more efficient, makes a lot of sense. And I really like that it's kind of coming from the blockchain space, kind of for the blockchain space first. So yeah, we would love to kind of support that. And I think most people would probably be supportive of that.
Yeah, maybe to add some color from the UK perspective, there was a recent consultation put out by the FCA that kind of, to me, understood the whole like digital asset ecosystem fairly well. There hasn't been a mention of like technology operated investment funds yet in that sense, but I guess we with Care1 will certainly write a comment to that and maybe even include it. And I think we spoke about it with Mama. It might make sense. And yeah, and in terms of regulation, everybody is, I think, finding his or her way in and how to manage with these things.
Yeah, and maybe to add to that, I mean, Mama was set up exactly for that purpose, actually. We really want to help promote on-chain asset management in the regulatory space globally. We will be providing feedback to the FCA report, but we are happy to say that on the back of feedback provided by Hans-Jörg, by the way, if any of you do have feedback that you want to pass through regulators, Hans-Jörg Hettisch is the guy to speak to here in the front row. Put your hand up, Hans-Jörg. Yeah. But yeah, I mentioned Mama yesterday. We're 65 members now, of which 2 of the panelists, Gabby and KR1, have been founding members, I think, from day one. And we're happy to say that the momentum is really picking up there, and that the Swiss Federal Blockchain Report had a few pages dedicated to the idea of on-chain asset management without financial intermediaries, and recognized this as a viable idea, and that they need to think about how that would look. Also, the French regulator, the French Finance Ministry, has recently received feedback with the support of AFGC, who Wharton helped found, who are also on the Mellon Council. And so putting that feedback in and having that recognized at this early stage, we see as a small victory, but a victory. And we hope we can do a lot more of that this year. So if any of you do have feedback you'd like to pass on, please do speak to us afterwards. Liquidity. Obviously, running funds on chain requires this mindset shift to DEXs. Maybe you can talk a little bit about your visions there. Liquidity, asset coverage, challenges. Are you involved? Do you trade on DEXs at all, even experimentally at this stage? There's a lot of interesting, innovative ideas we heard about yesterday. If not, why not?
I think the DEX have a very big advantage kind of centralized exchanges. It's listing free, so you pretty much every token could be listed in every decentralized exchange, and so you will not have the kind of a time delayed if you want to trade your tokens. We actually one of our portfolios, because there is so little money, and so they actually don't have money to pay for exchange listing fees. Then one of the biggest decentralized exchange actually listed actually provide the largest liquidity. We're surprised, and we're just say that's the future. And so that's I think something could happen not very so long, and because it solves problems, it's industry problems. Like so many centralized exchanges charge so much fees, and a lot of legitimate companies, they don't have much money to pay that fee, and also if they do provide enough liquidity, I think it could be working. So we actually have few projects doing that way, and afterwards, because the central exchange saw the liquidity or value in the decentralized exchange is have like around like 1 million per day, so they chose to list for free. So I think that could be a path for token that become liquidity through that way. But definitely also I think decentralized exchange also should be open-minded to learn from what central exchange did for provide market making service and to increase the value. I think could be something we can work around it, and definitely I thought still have a lot of time or work need to be done. Right now, like you check out like top 10 values still central exchange, but definitely they have huge bug there. I don't trust them put my funds there, just simply by that. And in this market, bear market, like the derivative trading pretty much one of the biggest value in this market. But at our funds, even we have strategy, but we can only test very small scale. Simply, we cannot control the counterparty risk come from the centralized exchange. So I would say the future definitely, I think, is something like you control your funds. But we still have a lot of work to do. It's just my experience.
Yeah, a lot of work. I think there are two major problems with DEXs certainly for us as liquidity providers first. I recognize that not all of the exchanges have on-chain order books, but even when you've got an off-chain order book, if you're a liquidity provider, every time you post an order, there's a gas cost that's non-zero, whereas on a centralized exchange, we can change our orders 10,000 times a day and it doesn't cost us anything. So we don't mind paying to trade, but paying to post orders is a massive barrier to entry. And the second thing that I think decentralized exchanges are going to have to start to worry about is some kind of quality control issue. In a highly regulated world, particularly as we see more security tokens start to emerge, if you end up as a decentralized exchange listing a security token because you have a kind of all-comers philosophy, then you potentially risk some kind of regulatory wrath coming back to bite you. And so I don't know how that would even work from a regulatory perspective for a decentralized exchange, but I do think it's something that the DEXs should be worried about.
Yeah, I was going to say I've seen quite a few projects that are going to be these regulated DEXs, and I think that's kind of becoming after the SEC kind of people started to realize that if you're listing potential securities on a decentralized exchange and you're taking fees, that you're then potentially liable to be fined or have all kinds of negative things happen to you. So I do think that regulated DEXs are going to come online, and us particularly can't really use it. I mean, we could, but it's just a lot more arduous as opposed to a centralized exchange with a read-only API that goes to our fund admin. But if we were able to plug into something that could read this and reconcile, that would make it much more easy. But I think, kind of to your point, I think that decentralized exchanges in general are going to kind of be this race to the bottom as far as fees. And I think it'll kind of benefit everybody. Like having that competition, the decentralized versus centralized, I think is going to end up benefiting a lot of the people who would use both. So looking forward to see how that kind of plays out.
Do any of you actually arbitrage as a strategy across exchanges?
We don't. We're very much like a venture-esque in style. We periodically rebalance our liquid portfolio, but we're not really kind of like actively involving or participating in arb strats or.
Yeah, I mean, same with Care1. Like, we barely interact with exchanges, very, very rarely. It's mostly venture investing, and that's why we also don't really interact with DEXs.
Because I thought it was pretty interesting hearing from Morten yesterday about their new approach, building an infrastructure that combines centralized exchanges and decentralized exchanges, and basically arbitraging between them, which is I don't think it's been done that much so far. I think most people shy away from it, but I think that's one step towards better liquidity. And there was another really great point made yesterday by Will. I don't know if he's still here, but Ethfinex have obviously been putting a lot of focus on user experience with all the polls they've done with their users, and some of the results I found a little bit surprising. But people being upset by the fact that they needed to pay or have ETH in their wallet to start with, for gas, and some of those basic things that I guess as technologists we would never see as real barriers. But it was quite eye-opening. And William Peets, who was supposed to be here with us today but couldn't make it at the last minute, sent across his feedback as well and said that performance and flexibility and usability was a really big thing as well. So I mean, it was refreshing to see that Will said in the next 6 months experience on Ethfinex should be, the user experience on Ethfinex should be the same as what you see on a centralized exchange, which I thought was amazing. What do you guys think about that as a barrier?
For me, I think Will's talk was really interesting too, because I think mostly they focus on the tech at first and now realize, hey, how do we get users and what do our users think? I think in general, just for the DEX stuff, still it's also interesting to see, for example, Binance even like launching this kind of decentralized exchange that's still to be figured out, like how it actually operates. But yeah, I guess it's really exciting if you have really big centralized exchanges trying to dip their toe into the decentralized world and then benefiting from their experience on the centralized part.
Yeah, I was gonna say I think user experience is really paramount for all of this. Like, you know, as technologists, we don't really, it's not really that bothered because we're used to it. We've been in it for a while. We've been, you know, participating in all these, seen them grow and develop. So, you know, looking back 2-3 years ago, it's infinitely better than what we had. But someone who's new to the space, it's a lot of steps. It's very arduous, and I think like it's very important for people in the space to realize that, you know, like every extra click that you add, you're potentially losing, you know, like 20-25% of your potential users. So every kind of complicated step that you add to that is a problem. So trying to abstract away a lot of that complexity, you know, being able to just deposit tokens and it kind of like will automatically switch to ETH and, you know, pay for your gas costs with that. I think that's what people are like really focusing on, right? Is like how to make it as easy to interact as possible, kind of abstract away the complexity to the back end and just have a really clean, polished kind of front end. So I think you're seeing a lot more products come about. You're seeing a lot more attention paid to UX. So I think that's really promising.
And the one thing I noticed is very exciting is actually a lot of the big wallets started to integrate this exchange within the wallets. One of the biggest wallet come from Asia. It's called mToken. They started, you can actually you know, switch and buy token from there. They integrate lots of dApps, Maker, so you can very easily to. I think maybe that's a way to increase our liquidity because those wallets are very like millions of users. Maybe the future of decentralized exchange is not you create another exchange. Maybe just integrate this technology into existing user base. That's larger values, which is like wallets. That's I feel very excited about.
Okay, I'd like to take the questions over to the room and see if anyone in the audience has any questions. Oh, great. Okay, Eds.
Hi there, Edward here from Web3 Foundation. Kind of to Russ, but could be to anyone or even anyone in the room. Obviously, we know about wallet hacks and the consequences of them. So, I guess, have you looked into on-chain governance, and would you be persuaded by something like that, where if a hack or a bug did happen in the code, potentially you could revert that by having some sort of on-chain governance process where the code can be rolled back and potentially replaced with a piece of code that works. And obviously this has been suggested, the folks at Parity have obviously suggested this. It hasn't happened, but maybe in the future it could. And I just wondered if that would persuade you to then put more of your assets into these funds if you had this more kind of certainty that if there was a whoopsie that maybe you could fix it.
Yeah, I really don't know what to say. I mean, as soon as you start talking about rollback and everything, I thought the whole point of some of this was sort of code is law and everything, and I don't know. I don't think I don't have an answer for that actually at all. It's not something I've really thought about, yeah, sorry.
Yeah, I was gonna say I think it's a really interesting conversation, right? Like you know, Vlad recently published a Medium article, and there's been this huge discussion kind of around that. And I think a lot of people kind of tend to lend themselves to blockchain should be that kind of code is law. Like you know, having that decentralization, immutability, trustlessness, like kind of makes blockchain, right? You know, so I think that that is something that might be a little bit problematic. And like, just in my personal opinion, I think that once you start introducing kind of like humans or any kind of governance or any kind of like subjectivity to this, it's kind of hard to say what that looks like, right? I do think that there is a potential model that could work, but I don't necessarily think that any of the proposals thus far makes sense to me. I think kind of deferring to, hey, this is what it is, you know, just make things a lot more simplistic, even though you do have unfortunate events where funds are locked and people would like to roll that back.
Yeah, I don't really have any more input towards this. Like, it's the governance question. I think with Vlad and Gavin at the Web3 Summit, they had a really good session about that. Is like how do you make a legitimate decision? I don't know. I mean, for example, with the melon cancer, it's like clearly defined now. With if those people think that something makes sense, then that comes to that decision.
I mean, legal ownership doesn't have to change; it's just fixing a bug.
Yeah.
So you still legally own all of your assets.
Yeah.
You wouldn't change that in law, right? Like actual law, not content law.
Yeah.
Okay, there were a couple of more questions. Jesse, here you can have this.
Thank you. Jesse McMakin from Deakin University. I just wanted to ask a question, really to Chance, actually. I was curious, the topic for this panel is obviously crypto pioneers and the transition to asset management. But wouldn't it be a bit of a challenge to the panel to say that you're actually the incumbents of this sort of industry at the moment, and that given that I think there's something like 3 billion people that are unbanked in the world, and we're talking about DEXs and tokenization of assets and liquidity where it wasn't existing before, wouldn't it be sort of better to say that the crypto pioneers are actually people that aren't in this room, and that they could actually be somewhere else out in the world, in countries that maybe don't have the financial infrastructure that we have access to here, and that they would probably look at some of the shortfalls, say in the Melon Protocol at the moment, as actually being better than what they have access to right now?
Not very clear with what's your main question is, but I want to share is actually I have been preparing kind of launch this kind of pivot for a long time, since 2017. But I think at long time, and also I was in US, I was scared with regulations, so I'm gonna forget about it. I'm gonna launch instead launch a centralized fund. Why I'm doing that? Because I think that one of the biggest problems of the DAO fund, one is the security issue. Another thing is a bunch of engineer coders trying to run a real fund. I don't believe just trying to decentralize everything. I just believe you solve real world problems, then you decentralize. If you decentralize, you can help, than the current solutions, then you decentralize it. If you cannot, think about if you're launching a decentralized fund in the Mono fund, then you have to performance good, at least than other right now running traditional way funds. Otherwise, it will make no points for users switching from the centralized fund investing, which more secure, not this box, than switching to this new kind of thing. But I think some partially things that could be working within 5 years, which I think is a crowdsourcing intelligence, which means, let's say I create a 100 million fund. Maybe I manage it in a traditional way, not use smart contract lock the funds, but I can decentralize partial of the work, which is could formalize multiple management team under a lot of child fund under this big funds. I think that's what right now our blockchain governance is good at. So basically, could sourcing a lot of the intelligent people, talented people across the world. As long as you have scale, you have track record. Right now, those people don't have access to capital, but if you through this platform, everybody with those talents, they actually could become a fund manager, get the profits. I think that could help other people to access those potential and unlock more and more. Could create great fund managers than right now. Pretty much people are fund managers. Most people are have relationships with LPs, right? Then they get funds, then they become fund managers. It's not based on your performance. So that's one of my thoughts, just step by step.
I think we're going to have to wrap up here for time. I just want to make a couple of observations and maybe just one small comment on Jesse's thing. I mean, we did just hear that 2 of the panelists here are about to launch a pilot fund after V1.0 is launched. And personally, I do think that puts them in the pioneer bracket. And then maybe on behalf of the technologists in the room, I hope you won't mind me saying this on your behalf, but I think from our perspective, we'd really like to, we're working very hard as an ecosystem to build on-chain asset management. And I think we'd welcome engagement as much as possible from the future users of these protocols. And I think getting involved, rolling up your sleeves. I know it's been a, a hectic 2 years in crypto, but maybe things are a little bit more sober now, which allows more time and reflection. But I think getting involved by either joining Mama or providing feedback to Mama on the regulatory side, providing user experience feedback to teams that are open to it, and any or just testing and providing feedback on that, I think would be welcomed by all the technologists in the room to a great extent. And with that, I'm just going to say a big thank you and hopefully a round of applause for the panelists.